OIC rejections are skyrocketing. And here's the number one step that most tax pros skip. You're wasting your time and your client's money if you skip this step. And it's the number one reason why your clients offering compromise are getting rejected. Hello, I am Nafisa Manira, your tax attorney CEO who rescues individuals and businesses with tax debt and trains the next generation of attorneys and CPAs and EAs to do the same. Welcome to another episode of Let's Talk Taxes Tuesday. So, in today's episode, we're going to get down to it. We're going to keep it real. We're going to look into, hey, why are these OIC offer in compromise applications getting rejected at such an increasing rate? This is what we want to look into today. And so today we want to cover four basic things that we want to cover today. I'm not going to keep you long. The first is we want to look at number one, what's going on with the increase in the OIC rejection rates? Number two, what are the common reasons why this is on the increase anyway? Number three, what is the number one mistake that people are making on their offering compromise applications? And number four, how do we fix it? So let's jump right into it and get started with what's going on. Offer and compromise rejection rates have increased. Now, the IRS just recently, at the end of May, they released their IRS data book. And basically, this data book is they release it every year in the springtime around May. Okay. And what this does, it gives you all the data, all the statistics on the collections, on the audits, on the examinations, on the income tax returns, all different types of returns. It gives you all the data for that, okay? And if you're a practitioner, you know that this is one of your major sources of resources that you use in trying to make sure you stay abreast on what's currently going on with the IRS and what's currently going on with their collection department. Well, let me see if I can share my screen here. I want to share my screen because I want to be able to show you guys this publication here. Okay. So I hope that you can see this because what we have here is you will see this chart, and I pulled this directly from the IRS data book. Okay. And you can find it irs.gov, IRS data book, 2024 fiscal year. Okay. But as you can see here for 2024 fiscal year, you see the dramatic drop in offer and compromise offers that have been accepted. If you look here, starting from 2015, you can see that the acceptance rate was basically hovering around 40%, 40%, 40%, 40%. Then we start to drop down in 2019 and 2020, of course, because we know the pandemic was going on and a lot of things were shut down and the IRS put a lot of the collection efforts on hold. But then as we get further and further and further away from the COVID, right, and collections start to resume again and people start to resume submitting their OIC applications, we see again an increase on the IRS acceptance of OIC applications. And then we have this dramatic drop in acceptance, right? So much so that, let me stop sharing here, okay? But so much so that in the fiscal year 2024, the IRS rejected 78.6% of all the OIC applications that were submitted. And surprisingly, there were only about 33,000. There were about 33,000 offer and compromise applications that were submitted. And out of that 33,000 that was submitted, only 7,199 were actually accepted. So what is going on with this increase in the OIC rejection? It's number two. What are the common reasons? The common reasons basically break down to two different categories: your technical reasons and then your substantive reasons. The technical reasons are going to be like, oh, people are submitting incomplete or incorrect form 433 A, B's, or F's. And those are basically your financial disclosure forms. People are submitting incomplete or incorrect forms. That's another technical reason that is causing people to applications to get rejected. Also, missing tax returns, right? The client is not current on either the estimated payments or withholding. And then another technical reason is a lot of times people send in the wrong payment, right? Because the OIC, there is a certain fee that you have to pay when you submit your OIC application, as well as depending on what options you're choosing, you may have to put down a down payment. And there are certain instructions on how you're supposed to submit those payments, whether you submit them together or separately, depending on what it is that you're doing. There's certain procedures that's supposed to be followed in terms of doing that. So these are avoidable. These are avoidable reasons that a client's applications are getting rejected. These are preventable reasons, right? Now let's look into some of the substantive reasons why some of these OIC applications are getting rejected. That would be, right, the IRS has calculated and thinks their RCP, which is what? Reasonable collection potential, is too high. In other words, the IRS is saying, we calculated how much money we think that your client should be paying us, and we think we can collect from your client a substantial amount of what they owe us, right? So the RCP is too high. The client really does have a lot more money compared to what may have been offered in their offer and compromise application. Another common substantive reason that OIC application rejections are increasing is poor documentation. You have to take the time when you submit these OIC applications on your client's behalf to document it. Think about it as if you are telling your client's story, right? Just like if you were in a courtroom and your client is on trial and you're giving your opening statement, or you're giving your opening argument or closing argument, you're framing the facts in your client's story. The same thing you have to do when you submit a lot of times the documentation, your explanations for special circumstances. When you lay down the facts of why your client should be granted hardship or special circumstances, right? So a lot of OIC applications are getting rejected because they have poor documentation about the hardship. They have poor documentation about the circumstances, which would cause the IRS to, guess what? Reject the application, right? So honestly, these technical reasons, these kind of hurt the most, right? Because these are preventable. These are preventable. That's three. Let's look at what's the number one mistake people are making on their OIC applications. The number one mistake that people are making on their OIC application is that the client is not compliant. At the time that the IRS receives the application, the client is not compliant. Either they have some unfiled tax returns, they have some estimated payments that they have not made, their withholding is not up to date. If they haven't filed certain extensions, right? This is the number one mistake that is being made on OIC applications, causing the IRS to reject them at such an increasing rate. And many people are either one, you have a lot of people who are submitting their OIC applications, what they call DIY, right? On their own, they're doing it themselves. You have a lot of practitioners, right, who are dipping and dabbing. They dabbling. They dabbling. They don't really know tax representation. They don't really know how to do it. So they just dabbling. And because they're dabbling, they're not trained. They don't know how to do it. They're making mistakes, right? So then the fourth thing we want to look at is, let's look at how do we fix this? Okay? 3 steps basically how we're going to fix this. Number 1, transcript review. We want to make sure that we request the client's transcript, the account transcript in particular, because it's the most comprehensive. And we also want to look at the wage and income transcript, because this has a lot of information that can tell us if the client has filed, what returns are missing, when they file, penalties and interest, if they had previous installment agreements, if they had previous submittals for OIC. And also, some of them have the CSAID date, right? The statute of limitations date on here. But reviewing these for different discrepancies between what your client submitted on their questionnaire that you had them fill out versus what the IRS actually has on their record. So transcript review can prevent you from ending up in a situation where your client is not compliant. Another thing is, when you do the 433A, B, or F form, you need to have some quality control measures in place to review those financial disclosures. Whether that is a checklist that you use, maybe you have another employee review that, right? Quality control around your client's financial disclosure forms that you are submitting to the IRS. And then the third would be to confirm your client's payment compliance. If they are required to file estimated payments, they have done that, right? If they are required to have a certain amount withheld, they have done that. These are ways that very preventable, very ways that you can use to prevent these technical errors that are being made, that is simply about somebody quality control and reviewing, right? This process will be able to prevent most of these denials by the IRS and rejections of the OIC applications. So remember, we talked about what's going on. We talked about, hey, what are the common reasons this is happening? Most of them are preventable, whether we're talking about the technical or substantive reasons. And then 3, the number 1 mistake is tax compliance. And I don't know if that surprises many of you, but that kind of surprised me, because that's a very amateur mistake, right? But if you have quality controls in place, then that will be something that's eliminated in terms of that being an issue when you submit your client's offer and compromise. And then the fourth, of course, I said, is how to fix it, which is making sure you have quality controls around your financial disclosures, your 433 A, B, and Fs that you're submitting, as well as quality controls around making sure your client has all the returns and estimates and withholding they're supposed to have, and submitted all their returns. So I hope this was helpful to you. And if so, make sure you like and subscribe, and put some comments down about other topics that may be helpful to you, or you might want me to go deeper in on the conversation, right? So thanks for joining me, Nafisa Manera, on another episode of Let's Talk Taxes Tuesday, and I hope you have a great, prosperous rest of your week. Look me up at Tax Roadmap USA, and contact me if you have any questions, or you have something that you want to go over, or you have a question about anything that I've submitted or talked about today. Have a great one. Bye.